And there you have it, the closing bell at the New York Stock Exchange. U.S. stocks fluctuated Wednesday as traders surveyed the latest update from the Federal Reserve while assessing the ongoing Russia-Ukraine conflict. Still, the market ended the day more or less flat, with the Dow down about 52 points.
The S&P 500 and NASDAQ also had flat finishes. The S&P finished up slightly. The NASDAQ was down a fraction of a percent. Joining us now for more on today's market movement is Jeffrey Kleintop. He is the Chief Global Investment Strategist at Charles Schwab.
Hey, Jeff, thank you so much for joining us. So can you explain what was driving the market today? We know there was a lot of fluctuation.
Yeah, today was pretty steady until we got to around 2 o'clock today. That's when the minutes to the January Fed meeting came out. Now, these minutes that really get into the detail of what was going on in terms of the Fed's thinking back in January didn't shed any new light on the size of the first rate increase. The market only really began to price in a more substantial 50 basis point move, something the Fed hasn't done since the mid-90s, until after that meeting. So it isn't too surprising that there wasn't any speculation in there about it. But the market took some comfort with the climb today around 2 p.m. when those minutes were released, that there weren't any signs of a more aggressive path upward for interest rates. Yet there are a few signs of inflation peaking here. We got the retail sales report today, very strong numbers. And we do know that with Canada as the U.S.'s biggest trading partner, actually bigger than China, and the combined value of the goods that have at least been blocked temporarily in the last few weeks at the U.S.-Canadian border, amounting to the same volume of goods that were coming through the ports of Long Beach and Los Angeles. We know there's still some upward pressure on inflation when we get next month's inflation report, and that's going to keep the pressure on the Fed to hike rates at the next meeting.
Jeff, Americans are spending. Retail sales surprisingly surged in January, despite inflation hitting its highest levels in 4 decades. How do these two factors impact the market?
Well, they're one and the same. I mean, it's a very strong demand environment. Consumers are just feeling better about their incomes. We know incomes were up in January. We also know virus cases were down. This is a little bit of a comeback for a weak December. We saw some pretty weak December retail sales numbers. So bouncing back in January as people feel more comfortable getting out, traveling, and spending a little bit. But this really is the other side of the supply shortages is the very strong demand picture. Demand is running at a very strong pace, and that's keeping upward pressure on prices, because when supply can't meet up with demand, there's only one way for prices to go, and that's higher.
All right, Jeff, President Biden has cautioned Americans that a Russian invasion of Ukraine could raise energy prices. So how else might an international attack impact the U.S. economy?
Well, the U.S. and China have very little trade exposure. I think Russia is the U.S.'s 40th largest trading partner, but that's not true for Europe. It's the 5th largest trading partner for Europe, and that's where they get a lot of their energy from, particularly natural gas. So we're seeing a much bigger impact on energy prices in Europe than in the U.S., where we've got our own domestic supply and supplies elsewhere. But that is a primary conduit, and it could result in a potential shock to the economic situation in Europe if consumers are suddenly forced to pay much higher energy prices. Maybe they won't be consuming as many goods, including those goods produced by American companies. So that is a potential risk in terms of the sanctions and the impact of Russia maybe cutting off energy supplies in response to any of those retaliations that the U.S. or other allies put in place.
All right, Jeffrey Kleintop, thank you for your time and for joining us.
My pleasure. Thanks for having me.